Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we are going to be looking at the New York Open. So we know that the markets have been silent for the last one day. We didn't have any major news happening in the markets. And of course, today we just had our first major news for the day. And that is expected to bring some much needed volatility in the markets. So once you join in, can you say hi on the live comment section? And this will confirm that everything is working just fine. All right, so let's proceed. I'll be starting with, first of all, looking at the charts and seeing how the markets are reacting. So for those who are watching the USD-JPY pair, we are waiting for some breakout here above 146.7. So it happened within the last 3 hours, and the market continued moving higher. And now we have a new data announcement. Also for the dollar index, you can see it has been accelerating higher, trying to retest last week's high, which is the Friday's high. And with this bullish momentum comes major trend shifts. So for pound USD, it's moving back downwards towards the Friday's low. A new high for USD JPY, and of course, Euro USD is moving further back downwards towards last week's low. So as for USD CAD, we were monitoring this sideways momentum on the 15-minute chart. So eventually we hit the break, and you can see how the market has accelerated in the last couple of hours. So this momentum is expected to at least retest the Friday's high before we see anything else in the markets. So as for the economic calendar, let's try and digest what has just happened. So we were waiting for news coming up at 4 p.m. So first news was S&P Composite 20 Housing Price Index, which came in at negative 1.2%, basically showing that housing prices are continuing to drop, but they're not dropping as much as previous month and not dropping as much as the anticipation. So housing market not dropping fast enough is not consistent with the Fed's expectation. The Fed's expectation is that the housing market continues weakening rapidly, and these would serve their goals of slowing down the economy. So housing price index came in at 0.3%. This is significantly below the previous reading of 0.7%, but it missed the expectation of 0.2%. So this basically means that in the month of July, the housing prices in the US were basically moving up, and they increased by 0.3%. So also, later on in the day, we will be seeing the major news for the day. This will be the Conference Board Consumer Confidence Survey. It will be released at 5 p.m. And of course, we'll be looking at the JOLTS job openings. So JOLTS job openings is a very important and key data point showing the trends in job openings in the US. So we know that they were lowest during the lockdown at COVID. This was in June 2020. But then after that, the economy started recovering. The job market started healing. And then there was increased amount of money in the system, which basically led to companies hiring to record highs. And I think the highest number of job openings happened in May last year. So since then, we have seen a slowdown in the number of job openings. So the overall trend can be clearly observed. The job openings have been sliding down lower, and it has been a drop for the last 2 months. That is in the month of July, as well as in the month of August. So seeing this trend continue is actually consistent with what the Fed is expecting. So when we get the next data point, we'll be comparing with the previous reading of 9.58 million, and of course the expectation of 9.49 million. So if there's a smaller number of job openings, then it basically means that less companies are hiring, and as a result of that, it would mean a slowing US economy. On the other hand, if there's a spike in job openings, then it would basically imply that the labor market conditions are getting tighter and companies are basically expanding, and the demand for labor is increasing. So that would be not consistent with the Fed's expectations. And as a result, we could be seeing the dollar strengthening because the Fed may be forced to go for another rate hike. So as for consumer confidence, it's also very important for the Fed. They want a slowing down consumer confidence. So as long as consumer confidence remains high, it remains a challenge for the Fed. So it's a survey of about 3,000 households, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. So when this survey is read and the actual outcome is higher than expected, meaning that there is increased confidence in the US economy, then people tend to spend more. And when there's most aggregate spending, we normally see inflation going back on the rise. And this is not consistent with the Fed expectations, basically implying that it could force the Fed to go for another rate hike. So in this case, if the number is lower than expected, if consumer confidence is dropping, that would be very consistent with what the Fed is expecting. And as a result, we could be seeing the Fed holding rates steady at the current level, and that is quite negative for the dollar. So from the current price action we are seeing in the dollar index, it's almost as if the market is betting that there is a higher consumer confidence and basically lower job openings. So that being said, looking at the reaction in the market for the housing price index data, I think it's time we try and understand what's currently happening in these charts. So with the USD card making a major rally, we are seeing it's almost retesting the high that we saw on Friday. So I think the market will play around this resistance level as we await the job openings data, and more volatility could be coming from this area. And of course, the Americans joining the market during the New York session at 4:30 p.m. So Americans join the markets at 4:30 p.m. This is when the New York market opens. And then at 5, we get a data announcement, which is expected to cause some good volatility in these charts. So key pivot point or decision point for USD card will remain this previous high of 1.36392. So as for gold, we have seen some good development over the day. Prices are facing a very strong resistance here, putting back down, but not yet to the target level. So for gold to continue pushing further back downwards, the data would have to be supporting a stronger dollar, and then we perhaps will be seeing prices dropping to 1903. So the key price levels on gold, if you go to the 4-hour chart, include 1954, which would imply an acceleration of prices higher. Of course, the 1903 price level, which was the low here towards the end of the week last week. So if gold happens to be taking on some weakness after the data release, then the immediate target now becomes 1903. So for AUD-USD, we were monitoring the situation here. This was a rising wedge, a very sharp drop from the upper trend line, and then a clean break and a continuation. And in such scenarios where you have a rising wedge and the market breaks out of the rising wedge, the immediate target is usually the previous low of that rising wedge, which is basically 0.63803. So there is a good chance we could be seeing prices dropping to that level, and that would be a much welcome development in the market. So as for US equity indices, we saw the market rising, but I insisted there is a good chance. And by saying this, I mean during the morning session, that is the market snapshot that we normally hold at 11 a.m. every day. So in this case, what we are seeing is a market that really struggled yesterday. Today, struggled to go up and then pull back downwards. So it's still within the ranging territory. So if you are to use the 15-minute chart, and then you monitor how the US Tech 100 has been doing, I think this would be a reasonable expectation that this market is not doing much around these areas. So that seems like a logical resistance level. And for the support, if you are to consider this, I would say the market is trading around here for the last 2 days. So from here, the price action yesterday, markets were largely sideways, then getting to this area, dropping for the back and struggling, and we don't have much volatility. So perhaps 5 p.m. Will be a major inflection point where we could be seeing a strong momentum movement, which would represent a trading opportunity, which is much welcome. It's something we have all been waiting for. So for US30, it's a similar pattern. So market that was struggling made a break towards the upper side, pulled back, and then retested the area. Now it's pulling back, and I can't say particularly, but we have a clean or a major trend. But if yesterday and today was anything to go by, I would say that the market is breaking the lower trend line here. So this would be to assume that yesterday, that was the price action. You can follow the lows, and now if you follow the highs, then it seems like we have this descending triangle where the market is now breaking towards the lower side. So also note that even if we are seeing some form of break, there's major news coming up at 5 p.m. and this has the potential to cause some momentum. So it's the same case for S&P 500, just some lazy sideways momentum after we experienced some good volatility last week. So it seems to be playing around this area here as the resistance and this area here as the support. So we don't have much to work with. We don't have like major data announcement yet. So 5 p.m. Will be a major decision point for SP 500 traders. So we will be watching closely to see how the market reacts and take advantage of the opportunity, especially if there's a break towards the lower side or if there's a break towards the upper side. So a break towards the lower side with momentum would imply a trading opportunity on the lower side, and a bounce towards the upper side then would basically mean a buying opportunity. So as for Brent oil, it's the same story yesterday and today. So if I was to literally just remove all this, then we would have these three subsequent rejections on Wednesday, Thursday, Friday last week. Monday, sideways momentum. And from this sideways momentum on Monday, I think it basically indicates that this market is just moving sideways for this week. So of course, we will be expecting some form of volatility. And an easier way to track this is to make an entry once the market makes a breakout. So we don't have a breakout yet. And this rectangle can be adjusted here on the 15-minute chart. So if there's a break upwards, we go long, a break downwards, we go short. But for now, it's just a swing within the rectangle or the sideways range momentum. So in this case, the market has just bounced from the upper side and it's now headed towards the lower side. So for European equity indices, we saw a very strong rejection happening early in the morning. So market going up, facing a rejection and moving back downwards. So it did not immediately proceed further back downwards. So there was this attempt to retest this area here. And now from the last 3 hours indicates bearish momentum. So I expect that European equity indices will start making a step backwards going into the New York session. So it's the same thing. So apologies for that. I think I lost my internet for a bit. So hi, Francis. Hi, Fanny Nyanchoka. I can see Cosmas Kirui, Lukashege, Gishohi, Joseph, Jack, and Charlie. Hi, J Squad, as well as Gabriel Mungai. Thank you, guys. Thank you for joining the session and also participating. So I lost my internet for a moment there, but now I'm back. So what we are seeing here on the UK 100 or the FTSE 100 is the market that formed a big tail here, indicating a rejection of higher prices, then formed a pin bar candlestick, long upper tail, and a very small body, also indicative of rejection of lower prices. The third hour, the market went straight up, wiped out the liquidity just above the tails, and then in the last 3 hours has been attempting to move back downwards. So assuming that the correlation holds between the three European equity indices, and at some point that the market starts taking a step back. So looking back, this was a major support level, and now the market has been unable to completely break outside that support level. So you can see after the candlestick that opened and went up, hasn't been able to proceed higher. So there's some form of pullback here. And now it's almost as if the market is waiting for the data at 5 p.m. to take a definitive direction. So I expect that there will be some form of correlation also trading the UK 100 index. So that's it for the day. I don't have much, so I'll take a deeper insight into what to expect for tomorrow. So for Brent oil, I always say the analysis is the same. So here we have a break, a pullback, and a couple of retests. And now the market went up, faced very strong resistance, and now it's due for another retest of this area. So from Monday to Tuesday, this is what we are seeing. A market that basically has been moving up and down, but on average, it has been making sideways momentum. So we can see from the open of the market yesterday up to right now, that market is not trending upwards or downwards. So it's just moving sideways with these swings between the two trend lines, the upper side of the rectangle and the lower side of the rectangle. So now we are on a swing back downwards for the WTI. And for New Zealand USD, we are testing a key level, support level. This is an area that the market was unable to break for the last couple of days, yesterday and of course Friday, and these other 2 days. And now it seems like the market has broken towards the lower side, and this could create some room for more momentum downwards. So a short selling position would suffice if the market clearly breaks this level and continues moving lower. Hello, Casey. Thank you for your response. Good insight. SPX, I think I've checked the S&P 500 already. So I'm very bearish on S&P 500. This is the longer term view. So if I zoom out, this has been the trend line here, and this is since the month of March this year. So the market has been consistently moving upwards, but the most recent price action has showed that the market can form lower lows. So the current low here is lower than the previous lows here, and the current high here is lower than the previous highs, which is consistent with a bearish momentum. So after the market broke this trend line, went up and then dropped all the way down, last week we had this momentum pushing all the way up towards the breaking point, pulled back towards the end of the week, and now the recovery, which also happened to be a part of Friday's ending and yesterday. Then today early in the morning, market attempted to go up. Then there was these two candlesticks indicating a strong entry by sellers. So I still have a bearish bias on this one. So I expect that price will continue pushing further back downwards. And if you're monitoring from a smaller time frame, this is the 15 minutes chart. So the breaking of this particular trend line that started yesterday and has been tested today might be the one that we are watching for to see whether there is enough bearish momentum to justify market entry. So well, this seems like a really nice plan. Sometimes you can get knocked on the face, and this usually happens whenever there is a news announcement. So that's why we have to be patient and observe what will happen with news at 5 p.m. where we're expecting the JOLTS job opening data. So jobs job openings data will be coming up at 5 p.m. And at the same time, we also need to identify whether there is a conflict between the outcome of the CB Consumer Confidence Survey and the JOLTS job openings. So if they both agree, for instance, a way they could agree is if they are moving in the direction of the Fed's expectation. So the Feds expect weaker consumer confidence and basically lower number of job openings. So if there's a lower number of job openings, the job market is softening, and lower confidence means that the consumer is also softening. That would be good for the Fed. They will consider holding rates, and that would be negative for the dollar. On the other hand, a higher confidence and a higher number of job openings would mean a tighter labor market with higher demand, and of course, a stronger consumer, which would be positive for the US economy, but also risks increasing inflation, and that would force the Fed to go for a stronger rate hike. And as a result, that would be positive for the dollar. And of course, we have been following the CME Fed Watch tool, which has been rising over the last 2 weeks, basically indicating that there is increased likelihood that the Fed may go for another rate hike. So from 9 to 13.5% and now 21.5%, this probability is increasing as we continue following the data-dependent approach by the Fed. So as you all know, these sessions are not investment advice. They do not constitute a recommendation to trade. So this is purely educational. Make sure that you do your own research, your own research, as well as practice proper risk management. Hello, OET and Kulia. Thank you, guys. I don't know if you just joined, but we are just finishing the session. So hopefully we get to meet on the next session tomorrow at exactly 11 a.m. And of course, tomorrow is Wednesday, so we'll have a new podcast episode coming up. So the Bullish Banter podcast has been getting some really good audience. So if you guys have some responses, recommendations, or even people you'd like us to post on the podcast, make sure to respond on your favorite podcast platform, be it YouTube, be it Spotify, could be Apple or even Google Podcasts, and we take all feedback seriously. So thank you guys, and I hope to see you on the next session.